Hey everyone, welcome back to Corporate Decoder, the place where we dig into the details so you don't have to. Today we're cracking open the Flat Rock Core Income Fund's latest update. Don't worry, it won't be as boring as watching paint dry, even though there are a few fee changes that might feel that way at first. We're going to see how they're managing your money and what those changes really mean for you. This update, dated March 4, 2025, is basically a cheat sheet that goes along with the original investment instructions. It's like the director's cut of the financial world. If you're already invested or thinking about it, this is your Cliff's Notes. Okay, so starting February 28, 2025, there's a change in how Flat Rock Core Income Fund figures out its management fee. It's now 1.375% annually, but instead of being based on the fund's total assets, it's based on the fund's net assets. Think of net assets as what's left over after subtracting some things out. Basically, they're calculating the fee on a slightly smaller number. This means the official paperwork, the prospectus, and the SI, which stands for Statement of Additional Information, are being updated to reflect this net asset approach. So anytime you see management fee mentioned, remember it's based on the smaller net asset number. If you want to know more about why the board approved this change, you'll have to wait for the report that comes out around June 30, 2025. That's where they'll explain their reasoning. Now let's get into the nitty-gritty of where your money goes. The fund expenses are all the costs associated with running the fund, and ultimately those costs come out of your returns. This table breaks down all the different costs you might not even realize you're paying. Remember, these are on top of whatever profit you make. Good news here, there are no direct fees for buying or selling shares. That's always a plus. Here's that management fee we talked about earlier. It's 1.38% of the fund's net assets, and this is what Flat Rock Global, LLC gets for managing the money. This is where it gets a little complicated. Incentive fees are basically bonuses they get if the fund does really well. In this case, it was 1.95%. These fees are calculated quarterly and depend on how much the fund makes before the incentive fee is even taken out. There's also a hurdle rate, which is like a minimum profit target they have to hit before they get the bonus. It's an annualized rate of 6%. Think of it as the fund manager needs to provide more than 6% return for you before they can take some profit for themselves. This is 2.51%. This covers the interest payments on any money the fund has borrowed. The fund uses borrowed funds in order to be able to invest more. It's like when a person takes out a loan to buy a house and then rents it out. Hopefully the rent covers the borrowed fund payments and also makes a profit, but it can be risky if the house stays empty. They have a $75 million credit line to help fund operations, so they have some debt they're paying off to juice up the returns. These are the catch-all expenses coming in at 0.84%. These include things like accounting, lawyer fees, paying the trustees, which are people who oversee the fund, basically the cost of doing business. This is kind of a hidden fee coming in at 1.31%. This covers the costs when Flat Rock invests in other investment funds, including private funds. Those funds also have their own fees, and this is what Flat Rock pays. It's like a fee within a fee, Inception style. These acquired funds can be pretty secretive, relying on specific sections of the law that allow them to avoid some regulations. All those expenses add up to a total of 7.99%. This is the total percentage of your investment that goes towards covering the fund's expenses every year. Keep this number in mind because it directly impacts how much money you actually make. This example shows you how much you'd pay in fees if you invested $1,000, assuming a 5% annual return and that the expenses stay the same. After 1 year, you pay $80 in expenses. After 3 years, that jumps to $232. After 5 years, it's $373. And after 10 years, you'd pay $687 in fees. Now, let's zoom out and look at the big picture. Flat Rock Core Income Fund focuses on investing in credit, especially in areas that might be overlooked by bigger investment firms. They aim to provide regular income, which is attractive for investors looking for stable returns. Here's my take. The change in how management fees are calculated is interesting. Basing it on net assets is arguably fairer, as it better reflects the actual value being managed. However, the overall expense ratio of nearly 8% is very high. High expenses eat into your returns big time. The incentive fees, while potentially motivating for the managers, add another layer of cost that investors need to be aware of. And the fact that they invest in other private funds makes it difficult to really know what's going on under the hood. The reliance on borrowed funds to boost returns also adds risk. If investments don't perform as expected, those interest payments become a burden. While the fund aims for stable income, these high costs and reliance on leverage could make returns more volatile than some investors might expect. It's important to weigh the potential benefits against those significant expenses. In conclusion, Flat Rock Core Income Fund presents an opportunity for income generation, but the high expense ratio is a major drawback. Investors need to carefully consider whether the potential returns justify those costs and be comfortable with the fund's investment strategy and use of leverage. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment with your thoughts, and subscribe for more corporate decoder deep dives. Until next time.